South Africa's consumer price inflation has now further surpassed the Reserve Bank's 3 to 6% target range at 7.4%. According to the latest figures by Statistics South Africa, the current hike in CPI is due to the continued rise in fuel and food prices, along with global inflation spiking. Now, for more on this and what it all means for the already strained consumers, I'm joined by our business anchor, Tumisang Ndlovu. Tumisang, we know, very good morning to you. The pressures continue to escalate. We've just listened to President Cyril Ramaphosa speaking to the structure of the economy, saying that we are yet to overcome the structural defects of our economy. It's the highest since May of 2009. What does this mean for the pressured consumer?
I hate being the bearer of bad news, and this is what we've been building up towards since this morning, talking to economists about this figure that's expected from the Stats SA with regards to CPI for the month of June. We saw the consumer price inflation figure breach the Reserve Bank's target range at 6.5% in the previous month, but it's now beat market expectations. So the market was expecting at least 7%, 7.2% of a hike, given that we are paying more for fuel as well as food, and the basic food basket has already, skyrocketed for many. But 7.4% we did not really expect. And what this then means is that inflation in South Africa is becoming a serious concern. How the Reserve Bank is going to react at this stage, economists are pegging that it will be a higher than expected increase in the interest rates. And here they are talking about either a 50 basis point increase or as far as 75 basis points. But the proof will be really in the outcomes of that Monetary Policy Committee meeting that we are expecting tomorrow. However, at this stage, 7.4% is quite shocking, to say the least.
Yeah. And what could be some of the drivers of this increase?
Definitely food, definitely fuel. Fuel has been going up for the consecutive months of 2022 in South Africa. We are chasing figures that we haven't seen before in terms of the fuel price increases. And of course, there's the domino effect on the consumer. The more it costs for fuel, the more that cost is going to be translated into food prices and again into what is coming out of the consumer's pocket, because travel costs are getting more expensive. So is the basic food basket, which we've highlighted on. Salaries are not going up. So having to maintain that balance is quite tricky. And speaking to ABSA economist Miyelani Maluleke earlier today, he indicated that all these factors are hitting the poorest of the poor in South Africa the most. But unfortunately, this juggling act that the Reserve Bank has to do is a tough one, because they also have to make sure that they do contain inflation.
We've heard President Cyril Ramaphosa speaking to some solutions, saying that self-employment and entrepreneurship are the engines of job creation in any economy. As matters stand between the two of us in the studio, is it likely to worsen? With regards to inflation, yes, the expectation from a wide range of analysts is that we are expected to see even higher inflation going forward into the rest of this year. We're seeing economies such as the US. The inflation rate has reached 9.1%, another figure that was not expected at that level. And of course, this is all happening within the dynamics of global inflation as well as worries of a global recession. So if the US is going through inflationary worries and concerns, who are we as South Africa with GDP growth so low? It's really shocking. We are speaking on the eve of the South African Reserve Bank's decision. That decision in itself, what will it mean? Dependent on, what the speculation is.
Well, it's definitely going to be a hike. I put my head on the block for that, because with 7.4% of inflation, the Reserve Bank has to react somewhat. What it means for mortgage holders, those who also have debt in other areas such as your car repayments, when the repo rate goes up, the lending rate goes up. And unfortunately, we do have that debate in South Africa that the interest rate at 4.75% is still moderately low. It's still accommodative because we come from record low levels as a counter to the effects of COVID-19. But when we talk about the parallels with the cost of living, We had a nice break, and now that break is over. Recess is done.
Sinking in, and it doesn't feel so great.
Yeah.
We're going to have to leave it there for now. Tumisang Ndlovu, the bearer of bad news, really just giving us clarity there on what this decision means. Inflation at a 13-year high, the highest it's been since May of 2009.